Hello, and welcome to Virtual Investor Conferences. My name is Laura Hamilton, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Ledyard Financial Group. Please note you can submit questions for the presenters in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Josephine Morin, President and CEO, and Peter Sprudge, CFO of Ledyard Financial Group, which trades on the OTCQX Best Market under the symbol LFGP. Welcome, Josephine and Peter.
Hi.
Hi, thanks, Laura.
So good day, everyone. I was about to say good afternoon, but it's possible that it's not afternoon yet where some of you are. And it might, who knows, might be a whole different part of the world, and then it might be on a different day. But anyway, welcome. We are delighted to have you sit with us for a half hour here. I am Peter Sprudge, as Laura mentioned. To my left is Josephine Morin. She's the CEO. She runs the show. I do what she tells me. We've got about 40 slides officially, but really a bunch of title slides. We've got about 20 slides of content. We're going to split those up. As Laura mentioned, there are questions. There is the ability to ask questions, so go ahead and please ask questions. I can't promise that we'll get to all of them on the call here, but I do promise that we will get to all of them afterwards if we don't get to them here. So we look forward to seeing and hearing your questions. So with that, let's go back to the slides. So there's the title slide, forward-looking statements. I will not bore you with the gory detail there. That's pretty standard stuff. So let me just jump into the high-level summary. So who is and what is Ledyard National Bank? So we are an $855 million community bank with a nearly $2 billion wealth management business. We've been around since 1991, and our core markets are in New Hampshire and Vermont. A key point about us is that we have a diversified earnings stream in that our wealth management business generates about 40% of our revenues on a long-run basis. We have an outstanding reputation in the community and with our clients for service and customer satisfaction. On the banking side, we have loyal deposit customers, great credit, and we have ample liquidity and capital on the balance sheet to support the growth strategy that we have embarked upon. On the wealth management side, it's kind of a soup to nuts thing. We've got a bunch of related services all available through a team-based service model. So we'll talk about all of those things in more detail. And finally, the thing to think about is we are focused on growth through expanding synergy between our two core businesses. And to support that growth, we have a new, maybe perhaps we should say new-ish leadership team and a very engaged board. Josephine's been here 2 years?
Over 2 years.
A little over 2 years, and I'm about a year and a half myself. So we are part of an executive management transition that has occurred in a very coordinated and sane fashion over the last, call it 2.5 years.
Mm-hmm. Yes.
Okay, so skipping ahead then. This slide here, Ledyard in a nutshell. We're going to return to this graphic periodically during this presentation. It illustrates, we think very well, what we're all about. We are, in fact, a bank and wealth business fused together that in a way that generates a lot of synergy. We wrap around that an intent to grow. That's our growth strategy, and we build that on a foundation of rigorous risk management. And like I said, this is it in a nutshell, and we will come back to this as we go through this presentation. So company overview. First, let me start with where are we located. So you see that box with a cluster of dots that is actually centered around Hanover, New Hampshire. It is in what is generally called the Upper Valley of New Hampshire. A little further southeast, you see a couple of dots in what is Concord, New Hampshire. That is a more recent addition. Our core markets are in that box up there. The Concord expansion has put us within about 75 miles of Boston. That's the nearest major metro area that we're nearby. So we have about $560 million of client deposits across 9 locations in New Hampshire and Vermont. Again, the core is up in the box. Our Concord presence, which Josephine will talk about a little bit more, is about 5 years in, and we are very happy with how that's going. Our wealth management business, the almost $2 billion in assets, has 3 offices. One of them is literally shared with one of our branches. The others are in very, very close proximity to our branch network as well. We have clients in 40 states, 10 countries, and 6 continents. The only one, obviously, we're missing, you can probably guess, is Antarctica. So, as I mentioned, we're established in 1991. We are regulated by the OCC, and the bank is owned by Ledyard Financial Group, which trades under the ticker LFGP. Assets we've talked about, historically, very strong performance. You got the 5-year average of ROA just under 100 basis points and ROE of just over 10. Wealth management, again, diversified revenue stream that generates about 40% of our revenue. Our balance sheet is very strong, both from the perspectives of capital and liquidity. We have a very high energy leadership team and a very engaged board. And we have spent the last year and a half with making a bunch of investments in personnel and infrastructure that's going to help us grow in the coming years. On the next slide, you'll see Josephine and myself. To the right, Michael Hakoun is the Executive Vice President and Managing Director of our wealth management business. He has a history of 20 plus years in this field. Most recently came from Toronto Dominion, and he has been here 3-ish years as well.
2.5 years.
Yeah.
Mm-hmm.
So he's also part of the relatively newish executive team.
Yeah, 3 years in the summer, actually.
On the next slide, this is just kind of a listing, if you will, of our various accolades. Obviously not going to read every one. You can check this out for yourself, but I think the theme here is in a couple of different places. Thematically strong in terms of clients like us, thematically strong in financial performance, and as a bit of an aside, but more than an aside, some recognition for being a good place and a place that's focused on women and women in business. Obviously, to my left is case in point. But it's really more than a coincidence and more than just a random fact. It's actually something that provides us a competitive advantage in some markets that we feel are underserved. So again, we'll talk about that in a little bit more detail as we get to the next section where my boss takes over.
Okay, great. Thanks, Peter. Hello, everyone. Great to be with all of you. So remember this. Here's the overview. We have a very diversified model. We feel that we have a lot of synergy within the model, and that synergy is providing what we feel is our catalyst to growth, and we're very focused on profitable growth. So just speaking about the community bank, the franchise itself is a combination of physical locations, which we talked about, 9 physical locations, a newly enhanced call center, which we implemented and grew in 2023, and also numerous online digital capabilities, very, very competitive, and we feel that our digital offerings are just as good as any large bank. As Peter mentioned, the Upper Valleys of New Hampshire and Vermont is our core market. We are also located in New London. We've been there since 1997. That's a very important market for us. And then Concord, New Hampshire, which we actually did a team lift out 7 years ago, and brought over about $250 million in assets at that time. And then a few years later, actually within COVID, the company opened the branch. We call them financial centers. And since then, in just a few short years, that branch has grown to $50 million in assets. So it's a great success story. It's a great model. We love the model. And at this point in Concord, we have every business line represented within the wealth office as well as within the financial center. We have very competitive product offerings, full suite of deposit and loan products as well as the wealth products. And in terms of on the lending side, we're probably about 55, 45 mix with commercial and residential. We portfolio our loans on the residential side, and we also have a high percentage of C&I comparatively to our peers. One thing that we are extremely proud of is our client satisfaction scores. We focus on Net Promoter Score as well as customer satisfaction. That was implemented in 2022, and our scores are off the charts, over 85 and 90% in both NPS and client satisfaction, and very, very consistently. So our clients are very happy with our service. One of the things that we did in terms of growth strategy and all the investments that we focused on led to 16% growth in loans last year. We actually ranked third highest in loans in our geographic area in terms of New England and our peers. And we also had a very nice uptick in client deposits in the fourth quarter, 15% up in Q4. So our growth strategy is paying off. Okay, next slide. What we really would like you to take away from this slide, and I'm sure you can read it and go into it later, but basically in our core market, we are in a very good, very affluent area. It suits our clientele and our wealth business very, very well. There is a lot of opportunity in our entire footprint, our entire market, all the way through Concord, for healthcare and hospitals and doctors and anything under that category. Highly educated area, and actually in this area, in the Upper Valley in Hanover, highest percentage of small businesses with populations this size. And Hanover, which is in the heart of the Upper Valley, has been touted over the years consistently that it's one of the best places to live. So, next slide. Just speaking a little bit about our overall delivery system, it's omni-channel. That's what we really want you to walk away with. We will meet the client however they would like to bank. So as I mentioned before, we call our branches financial centers. It's a trusted advisor model. We do not have tellers. Everyone is a banker, and the banker can do anything from money management to making sure that they can discover opportunities for retirement to refer to other business lines. So, and then with our financial centers, beginning with the Concord branch opening, that was the initial financial center with our high-tech, high-touch model. Very open, very welcoming, and we continued that with our Hanover and our Norwich location renovations. Very client-friendly, and we will continue that over the next couple of years with upgrading all of our financial centers to, with that similar look and feel. We also implemented 24/7 call center, remote. We have 3 folks. They're taking over 2,000 calls a month, and the average time to answer is 12 seconds. The average talk time is 4 minutes. It's been very, very successful, and right now they're doing a lot of servicing, and in our future model, it will be a profit center. We'll also be offering products and services there as well. And then finally, we've done a lot of upgrading to our online and mobile banking. We did a recent upgrade of online and mobile banking just in 2023. We have digital account opening capabilities, which we will be enhancing and upgrading this year as well. We have added Credit Sense, which does much more than just track your credit. It's an outstanding tool for clients. And we also have money management tool called Money Map, where that allows you to budget and maintain track of all your finances. So we have a very large and diverse array of digital options, and you can bank any way you'd like. One more thing that we also offer our clients are ITMs. They're the interactive teller machines. So if you did want to interact with someone, you can, or it acts as an ATM. Okay. Here you can see on this slide is our community banking leadership. We have Mike Parisi, who is our Chief Strategy Officer, has been here 7+ years. We have Sue Fernald, our Chief Risk Officer, 6+ years. Tremendous amount of experience in overall banking, pretty much their entire careers, great talent. And I just want to also call attention to Kim LeBron. She's our Chief Lending Officer. We had a retirement with our senior lender, so we enhanced the position, and she is overseeing commercial, consumer, and residential lending. She has over 25 years of experience, and she has been a key component in our loan growth. Okay. Let's talk about wealth management next. Peter talked a little bit about our model, but basically we do wealth management extremely well. We have a team model for all of our clients. Our average client has about 2.7 million in assets with us. 90% is managed money for individuals, and then the remainder is custody and then institutional funds as well. And we had a lot of focus in 2023 with our growth strategy on growing clients. And we had our best year since 2010 last year. We brought on 173 million in new assets, and we had the highest number of new clients that we've had since 2010. So when I talk about our strategic plan a little bit, you'll understand why, but it definitely made a difference for us last year, as well as, growing assets under management in terms of the market. One key component and catalyst of the growth has been in the reintroduction and enhancement of our private banking model. We brought over some very talented individuals from TD Bank who had a lot of experience with private banking, and they are basically the coordinators between the community bank and our wealth team. And right now, in just a little over a year and a half, we have about $30 million just in private banking assets. Okay. You see a picture here of our CIO, Doug. He actually creates the strategy for all of our portfolios. They are managed in-house. And it's a very conservative method to investing. 1.9 million in assets, as you know, there's a 6% compounded annual growth rate since 2018. We talked about 40% of the company revenues are coming from there, and of the 120 folks that work for Ledyard, nearly 40 of them are in our wealth area. And we offer all phases of wealth management: tax planning, retirement planning, investments, Medicare planning, and also business exit planning, which was a focus for us and continues to be focused going forward. We have 600 client relationships, a little over that, in 40 states and in 10 countries. We have 3 locations in wealth management. Okay, let's talk a little bit about the synergy. So we call it our One Ledyard approach. When we meet with a client, we are looking for the full relationship. It's all about relationship banking. That's what goes back to trusted advisors. Our operating model, the way we are set up in all of our locations, we have a full suite of folks to service our clients. It's not just bankers. We have all business lines readily available. And we did a very, very good job over the last year and a half of breaking down all silos and working very, very closely together to ensure that we are bringing that full relationship and offering that to our clients. Again, the private banking integration piece played a very, very large part of that. And we were able to offer enhanced products and services along with that upgrade of private banking. One thing that I want to mention that I spoke about a minute ago is our certified exit planning service. That's really a differentiator. We are able to help the business owner in all aspects of retiring from their business. We can help them with the sales. We can help them with the lending piece. We can also help them with the retirement piece. And we have two folks on our team that are actually certified exit planning specialists. So that is a big focus for us. We also offer emerging wealth services. That's our brokerage function, which is available through Osaic. And, we can service clients at any stage from beginning until retirement and after retirement. And also in the beginning of this year, we actually moved over $100 million of wealth management money into sweep account balances on the bank deposit side. So that was very successful. That was a total coordinated effort between the community bank and the wealth management business line. So far it's served us well this year. Okay, I'll talk a little bit about our strategic plan. So as Peter mentioned, the process began in 2002. We actually did a lot of work the year of 2002, just building the foundation and ensuring that we were creating efficiencies and we had everything set so that we could grow. The plan was developed at the end of 2022. There are three components to it, pillars we call them: growth, client experience, and employee engagement. And we fully believe that if we take care of our employees, they will take care of our clients and we'll be able to grow. That's basically our model. We did a lot of investments that year in our financial centers and also within our infrastructure to ensure that we were prepared for growth for 2023. So in 23, the growth strategy was launched. The very thoughtful succession plan was completed in terms of retiring folks and bringing on some additions and new talent. And there were 4 areas that we really focused on in order to ensure that growth was going to happen. And one of them was hiring people, which we did. We added great talent to the staff. We revamped and we expanded our marketing. We did some disruptive marketing. We did different things, a lot of digital and social media marketing. We invested in our people with relationship-based training. And then we also changed our incentive plan so that we could incent everyone to refer to each other. And that worked really well. We had a great year in growth. We executed extremely well in our strategic plan, and we hit the targets that we were looking to hit in terms of growth and adding talent. And for this year, we have 4 focus areas, which continues our strategic plan. We're going to be introducing a new small business line. We're going to be introducing healthcare professionals, entire strategy around healthcare professionals. And we're also very focused on women. We have a large strategy on women, services and education around women. I know there's a question about this, but yes, in terms of the strategic plan and growth, it's both organic and inorganic. We want to make sure that within our footprint and within the clients that we have their full relationship, but we are also looking to expand in Southern New Hampshire. We are very interested in team lift outs. We are interested in loan production offices. We're interested in whatever makes sense for profitable growth in those areas. Okay. Our strategic plan vision is that we're the bank that makes life better. Hopefully I've described why. We are high touch, high tech. We provide excellent customer service. We are there for our clients, but we can also offer any type of online, digital, mobile capabilities and allow our customers to bank the way they want to bank. So, and we can offer all from basic money management all the way to, to full retirement and tax services. So we feel like with our strategy, and it's an internal vision, that we are the bank that makes life better. Okay. And then I think this is my last page, but just to give you an idea of the strategic plan. So talked a little bit about this, but we added client-facing staff in 2023, and we also provided relationship training. Client experience, we introduced the client center, we redesigned the financial centers, we added all of the personalized digital client outreach services. And then around employee engagement, we introduced career pathing for our folks. We improved our entire benefits program for all of our team members. And we launched a diversity, equity, inclusion program as well. For this year, I talked about some of our focuses already, but we also are enhancing our cash management strategy. We will be continuing our second phase of relationship development training. We're continuing to recruit talent. In addition to the healthcare, the women, and the small business, we're also going to be introducing digital consumer and small business account opening, which our competitors do not yet offer. So we will be first there. In terms of marketing, we have an enhanced client communication strategy, and we're going to be doing video, which will be coming out in the second quarter, to just with our clients to talk about our brand and what we have to offer. 2024 plus, we want to enhance our contact center. We're looking to implement a CRM program, and we're looking at other ways to attract talent as part of our ongoing strategic plan. So Peter, I'll turn it to you.
Okay. So let's talk about risk management. So I think the key point here is this is something we take super seriously. And I think we can point to a track record of real prudence in this area. We've historically had very low credit risk. And if you've looked at our balance sheet, we have strong liquidity position and a strong capital position. And we have low tolerance for operational risk. So that pretty much covers the gambit. This is not something we take lightly. In a recent past, we've had the risk committee officially formalized last year. We have enhanced the way we think about the various asset liability management topics around interest rate risk and liquidity and so forth. With Kim's arrival, Kim LeBron, that is our senior lender, in the latter part of last year, we did overhaul the credit policy. And for those of you who are interested, we did adopt CECL as of January 1st of 2023. So we just wrapped up our first year under those sets of rules. I'm looking at the ticking clock here. I've got about a minute and a half, so I'm not sure we'll get to many questions, but let me just touch on a couple of things real quick. On this asset liability management page, the chart in the upper left illustrates the excess capital that we have at the bank above the well-capitalized minimums, which are illustrated by the blue bars. So we are clearly well-capitalized. On the liquidity and risk management front, the $100 million of wealth funds that we transferred onto the balance sheet has created enormous liquidity for us. So that positions us extremely well in that regard as well. And from an interest rate risk management standpoint, you can see the portfolio stats on our investment portfolio. And our policies here are to manage both earnings at risk as well as the economic value of equity. Flying ahead to the credit risk page. So the thinking here again, or the illustration here on the lower left chart, we should probably change the scale on this chart because they look like big numbers, but these are all numbers that, as a practical matter, round to zero in terms of charge-offs. You can see that in 2 of the last 5 years, we actually had net recoveries. 2 of them literally round to zero, and one is $29,000. These are nominal charge-off numbers. In the upper right, this is credit reserves as a percent of loans. You can see the big drop from the end of 21 to the end of 22. That was basically the undoing of a buffer that had been created at the time of COVID. And since then, we've adopted CECL, and it's been kind of in the same ballpark. Operational risk, don't need to spend much time there, so I won't. And I'll skip ahead to the last couple slides here. What you guys care about is how's the stock perform. So you can see here, this is a plot of the calendar year of 2023. We are the green line that ended up at 5.1, so very, very much aligned with pertinent benchmarks. Slightly more recently, here's the last 6 months view, kind of gives you the same answer. We're pretty much in the same ballpark with everyone else. And this slide, again, provides very high-level summary. The top two panels, assets and assets under management, illustrate the growth strategy in play. The lower left and the lower right talk about income. You can see, of course, the income last year was not what it had traditionally historically been. That, of course, is largely driven, if not entirely driven, by the rate environment. And we expect that to correct over time. So I think that's probably all I have time for. There is an appendix with more stuff, and I see there are some questions that came in, which we will absolutely respond to offline. With that, I think our time is up. So thank you for sticking with us if you're still there, and thank you for listening in at all.
Thank you very much, everyone. Appreciate your time.